Well, alrighty then. It's time for my unique perspective on the markets. We got a lot going on. There's a lot to talk about. So relax and let's dive into it. So here we go. There's two things you need to look at. One, the most important thing, look at the VIX. Look at the CBOE volatility index. You look at that. That is the driver of this market, in my personal opinion. There's a lot of talking heads, okay? I'm going to give maybe an unpopular opinion, but it's my view of the markets. So what I look at is the VIX. And the VIX drives everything, because here what we have. We have the S&P 500 index and we have the volatility index. They have an inverse relationship. When the VIX spikes and goes up, the S&P 500 goes down. And vice versa, when SPY or the S&P 500 goes up, VIX goes down. So we've had a lot of VIX spikes in the last 2 weeks. I've been shorting the VIX the last 2 weeks via VXX, ticker VXS, and I'm selling call credit spreads, selling premium, and when volatility drops, then I make money. So you got to think of the volatility index like a rubber band of free money, essentially, because it is probably the easiest way to make money in the entire world. You're essentially selling emotions, human emotions. So what you have right now is a lot of human emotions. I understand, yes, Russia, Ukraine, it's bad and everything, but it doesn't affect the earnings report of Apple. I'm sorry, it doesn't. So this is all drama and noise, and you have to view it as drama and noise or you will lose everything. Not financial advice. I'm saying this for entertainment purposes only. My prediction, here we go. Let's just get with the predictions, okay? So I'm predicting in at least 2 weeks. 2 weeks of a big drop in volatility. The VIX is close to, I believe the last time it's like 27 something. Let's just, for our purposes, say 27.33 is the volatility index. It'll probably touch 30 tomorrow, okay? Because there's going to be some volatility tomorrow. There's going to be some market volatility. Indexes should go down. I hope they do. I will be buying this dip. You guys do whatever you want. I will be a buyer of this dip, and I will be shorting the VIX through VXX, ticker VXX, which is essentially VIX futures, because you can't trade the VIX. It's not a stock. It's literally a measure of fear. And you're going to have fear rise. And when the VIX goes down, what you have is the financial institutions have their algorithms and the machines automatically buy shares of SPY when the VIX drops. And it literally drops 99.9% of the time. So when you think of it like that, you have an instrument that literally goes down 99% of the time, okay? It's literally almost designed to go down. So then you have SPY, okay, which has an inverse relationship. So if you have an instrument, the VIX, that goes down, and then algorithms and machines that automatically buy, they don't care about what's going on in Guantanamo or whatever, in Kiko Bulawake or whatever. It doesn't matter. The machines have no emotions. You need to think like a machine. It's the way I think, okay? For my followers, I would really advise you guys to think like a machine and not give in to this drama and bullshit. But there's going to be a war. I don't care, little Johnny. I don't. I really don't. What I care about is staying objective, okay? Looking at options data. Where is the money going? I'll tell you where it's going. It's inputs. Everyone is hedging right now to the teeth. They're scared. They're afraid. Okay, so what's going to happen when the market opens tomorrow and all those people cash out those hedges? Well, they're going to go long. They're not just going to let the money just evaporate into money heaven. No, they're going to put their money to work, okay? They're going to buy stocks, okay? Stock market is not going to crash. Bitch slap whoever tells you that the stock market is going to crash because of Ukraine and Russia. Okay, it's not going to happen. Okay, I don't care. VIX futures are trading right now. Okay, they're barely up a tiny little bit. Nothing. If this was a real crash, VIX futures would be up 20% and the indices futures would be down 3-4%. And we'd see some serious fear. I'm not really seeing that. I'm not seeing that. So the money will rotate out of gold. A lot of money was going to gold and bonds. It's going to rotate out of gold and bonds. The VIX is going to drop, and that money's going to pour back into stocks. Yes, sir. So I'm long and strong. I'm just watching all this drama and bullshit happen and laughing. I'm laughing, and you should laugh too. Always stay hedged. Always stay hedged. And what do I mean stay hedged? Owning gold and silver is a hedge. And also hedging your portfolio with put options. I hedge my portfolio with put debit spreads. It costs sometimes $3 or $4. I date them about 7 to 10 days out. You know, if I'm really doing a lot of stuff, I want to protect your assets. That's what hedging is protecting your assets. If you don't know about options, learn about options for the sake of covered calls and hedging your portfolio. If you don't want to learn about options, I don't know what to tell you. So listen, long and strong, VIX is going to drop. Give it 2 weeks. Let all this emotion and all this fear and all that play out. Let them play their games. Let the articles, the fear articles come out. Let, the CNBC and the propaganda ministry, because that's what they are, let them spew their garbage. People are going to eat it up. They're going to sell and paper hand their stocks. And they're just going to be scooped up by institutions and savvy investors. So, stay frosty, my friends, because it's fucked up out there. But if you stay frosty, you will make money in this market. Alrighty, my friends.